Welcome to this analysis of Patanjali Foods, focusing on the FY 2026 results and the future growth outlook for the company. We'll be reviewing the record revenues, margin challenges, and the company set to gain in FY 2027. Let's begin with a key performance overview, summarizing the main highlights of Patanjali's financial year and their strong push into the FMCG market. Patanjali Foods achieved a record revenue milestone in FY 2026, crossing the 40,000 crore rupee mark for the first time. The key driver was robust growth in both edible oils and FMCG segments, supported by strong rural and rebounding urban consumption. Looking at the Q4 FY26 snapshot, there was a 15% year-over-year revenue growth. However, this growth was accompanied by higher expenses and a significant increase in finance costs, reflecting higher borrowing needs. Growth is driven by two main engines: branded edible oil, like Ruchi Gold, and the FMCG segment, which saw a 39% growth in products like biscuits. Palm plantation efforts are also securing raw materials. Despite revenue growth, profitability faced pressure due to rising raw material and finance costs. Expense growth at 16.4% and a finance cost hike of 42.9% outpaced the 15.1% revenue growth. Management guidance for FY27 projects 3 to 5% volume growth for edible oil, 8 to 10% revenue growth for the food portfolio, and an ambitious 15% growth target for the HPC segment. The overall EBITDA growth target is 12 to 15%. The growth trajectory benefits several partners. Logistics firms will gain from distribution expansion. Retail and e-commerce platforms like Blinkit and Zepto will benefit from HPC growth. Quick commerce platforms will see growth due to rising urban FMCG demand. Key reasons for market growth include distribution expansion into southern India and vertical control over supply chains. Furthermore, the rural-urban balance and the shift towards branded premium products also contribute significantly. Patanjali's market strategy is shifting from price-led to volume-led growth in the FMCG sector. The focus on home and personal care, targeting 15% growth, positions them to compete with industry giants. The blended EBITDA growth goal is 12 to 15%. For investors, the strong revenue growth shows high potential, but rising expenses and debt levels require caution. The net profit was boosted by a one-time tax credit, indicating tighter real operations. Thank you for watching this video on the analysis of Patanjali Foods.